Insurance plays a pivotal role in the freight industry, protecting brokers, carriers, and shippers from various risks that can lead to financial losses, legal liabilities, and operational disruptions. Whether you're a freight broker arranging the transport of goods or a carrier responsible for the physical movement of the freight, the right insurance policies can safeguard your business against unforeseen events like theft, damage, accidents, and liability claims. This comprehensive guide explores the essential types of insurance in the freight industry and how they can protect businesses from risks while ensuring long-term stability. Let's first explore why insurance is crucial for freight brokers and carriers. The freight industry is inherently exposed to multiple risks throughout the supply chain. Goods are transported across long distances, sometimes even across borders, and are vulnerable to theft, damage, accidents, and loss. Additionally, freight brokers and carriers can be held legally liable for financial losses if they're found at fault for mishandling goods or violating contractual obligations. For freight brokers, their role is primarily about connecting shippers with carriers, but this doesn't absolve them of liability. Brokers can be held responsible if goods are lost or damaged, especially if they fail to select a reputable carrier or adequately vet insurance coverage. On the other hand, carriers are responsible for the actual transportation of goods, making them directly vulnerable to risks during transit. Insurance acts as a financial safety net that helps businesses mitigate these risks and continue operations without significant disruptions. Without adequate coverage, freight brokers and carriers could face lawsuits, regulatory fines, or reputational damage that can cripple their business. Next, let's explore the types of insurance for freight brokers and carriers. Understanding the various types of insurance available to freight brokers and carriers is essential for building a robust risk management strategy. Here are some key policies to consider. First, contingent cargo insurance. Contingent cargo insurance is a critical type of insurance for freight brokers, as it serves as a backup to the carrier's cargo insurance. It kicks in when the carrier's insurance fails to cover a claim, or if the carrier is found negligent in the loss or damage of cargo. Contingent cargo insurance offers protection to freight brokers who are intermediaries and may be held liable for mishaps that occur during transportation. Now, let's dive into why it's important. First, it provides an additional layer of protection when the carrier's insurance does not respond. Second, it helps protect against disputes with shippers who may seek compensation from the broker when carriers cannot pay. Additionally, it mitigates the financial risk to brokers who may otherwise have to cover losses out of pocket. Next, motor truck cargo insurance. Motor truck cargo insurance is a must-have for carriers as it covers the freight they are transporting from physical loss or damage due to accidents, fire, theft, and other perils. This insurance is specific to carriers and is often required by brokers and shippers to ensure that the carrier can cover the cost of lost or damaged goods while in transit. Now, let's discuss why this insurance is important. First, it protects carriers from paying out of pocket for damage to goods they are transporting. Second, it provides financial security to clients, ensuring they will be compensated if something happens to their freight. And finally, it's essential for maintaining credibility with shippers and brokers who may require proof of motor truck cargo insurance before entering into a contract. Next, general liability insurance. General liability insurance covers freight brokers and carriers for legal claims arising from property damage, bodily injury, or advertising injury. For example, if a truck accident causes damage to property or results in injuries, general liability insurance can cover the legal costs, settlements, or judgments related to the incident. And why is this insurance important? First, it offers broad coverage for a range of potential liabilities that can arise during freight operations. Second, it provides protection from lawsuits that could be financially devastating without insurance coverage. Additionally, it's a key requirement for many contractual agreements with shippers and partners. Next, errors and omissions insurance. E&O insurance, also known as professional liability insurance, is designed to protect freight brokers and carriers from claims arising from professional mistakes, miscommunication, or negligence. For brokers, E&O insurance can cover errors like incorrectly filing paperwork, misquoting rates, or failing to relay critical shipment details to carriers. For carriers, it may cover liabilities like delivering goods to the wrong destination or failing to meet deadlines, resulting in financial losses for the shipper. Let's explore why it's important. First, it covers financial damages caused by human error, oversight, or failure to deliver services as promised. Second, it helps protect against costly litigation and settlements due to professional negligence claims. And finally, it offers peace of mind to clients who are trusting freight brokers and carriers to handle their business needs accurately and efficiently. Next, let's discuss commercial auto liability insurance. Carriers operating trucks or any commercial vehicles must carry commercial auto liability insurance. This insurance covers liability for bodily injury and property damage caused by the operation of commercial vehicles. It is legally required in most jurisdictions and is crucial for protecting carriers from lawsuits and damages arising from accidents on the road. Now, why is this important? First, it provides coverage for accidents involving commercial vehicles, reducing the financial burden on carriers in the event of an incident. Second, it's essential for meeting legal and regulatory requirements for operating commercial trucks. Additionally, it ensures that carriers can cover costs related to third-party injuries or damages without jeopardizing their business. Now we'll get a better understanding of workers' compensation insurance. Freight brokers and carriers who employ workers, especially truck drivers, warehouse staff, or office personnel, need workers' compensation insurance to cover injuries or illnesses that occur on the job. This ensures that injured employees receive medical care and compensation for lost wages, while also protecting businesses from lawsuits related to workplace injuries. Let's look at why it's important. First, it's legally required in many jurisdictions for businesses with employees. Second, it protects businesses from lawsuits by covering medical expenses and lost wages for injured employees. And finally, it provides peace of mind for employees, knowing they are protected in case of workplace accidents. Selecting the right insurance policies for your freight brokerage or carrier business requires careful consideration of your specific operations, risks, and legal requirements. Here are some key factors to keep in mind. First, assess your business's risk profile. Before purchasing insurance, assess your business's risk profile to better understand potential liabilities you might face. Consider the type of freight you handle, the routes you operate on, and the size of your business. High-risk cargo, such as hazardous materials, may require additional coverage, while operating in regions prone to theft or accidents may necessitate higher limits. Next, evaluate the carrier's insurance. Freight brokers must always verify that the carriers they work with have adequate insurance coverage. Confirm that the carrier's motor truck cargo insurance is up to date and sufficient to cover the value of the shipments they are handling. Brokers should also ensure they have contingent cargo insurance as a backup in case the carrier's policy doesn't respond. Next, understand policy exclusions. Not all insurance policies cover every potential risk. Carefully review policy exclusions to avoid surprises when filing a claim. For instance, some motor truck cargo insurance policies may exclude coverage for specific types of goods like electronics or perishable items. Ensure that your insurance covers the specific risks your business faces. Next, ensure adequate coverage limits. It's essential to have sufficient coverage limits that reflect the value of the goods being transported and the potential liabilities your business could face. Underinsuring your business may leave you vulnerable to significant financial losses. Consult with an insurance expert to determine appropriate coverage limits based on your operations. And finally, stay compliant with legal and contractual obligations. Many states and contracts require specific types of insurance, such as commercial auto liability insurance or general liability insurance. Ensure your business meets these requirements to avoid penalties and protect your ability to enter into contracts with shippers and partners. Failing to secure adequate insurance coverage can have serious consequences for freight brokers and carriers. In the event of a major accident, cargo theft, or lawsuit, businesses without sufficient insurance may face crippling financial losses. Beyond the financial impact, inadequate insurance can damage your reputation and lead to lost business opportunities, as shippers and clients may be unwilling to work with an uninsured or underinsured company. Moreover, legal penalties and fines for not meeting insurance requirements can further strain your business. Without the proper coverage, a single incident can force your business to close its doors. In the freight industry, insurance is not just a regulatory requirement, it's a vital safeguard against the risks and uncertainties that accompany the transportation of goods. Whether you're a freight broker connecting shippers with carriers or a carrier responsible for moving freight across the country, choosing the right insurance can protect your business from financial ruin and legal liabilities. By understanding the different types of insurance available, such as contingent cargo, motor truck cargo, general liability, and E&O insurance, you can tailor a risk management strategy that fits your business's needs and keeps you on solid ground, even in the face of unexpected challenges. As always, we appreciate you for watching and hope you're continuing to gain some valuable knowledge about the world of freight. For this information and so much more, visit our blog at www.transcredit.com. And don't forget to like, comment, and subscribe to our YouTube channel at Transcredit. Keep tuning in as we continue to dive into even more topics to help you as you embark on your freight journey. We'll see you next time.